Good morning, professors and participants. First of all, thank you for attending the meeting. Before we start our presentation today, let me introduce myself. My name is Alicia Putri and my partner Catherine from Petra Christian University, Surabaya, Indonesia. Today, we want to deliver our presentation about investor response to stock split from consumer goods sector in Indonesia. One of the variables that can affect stock price and award by the market is the stock split. Previous financial research has shown that stock split tend to be accompanied by positive abnormal returns. However, other studies conducted have shown that there was a negative abnormal return on the stock split. Research in one sector can facilitate investors in obtaining the maximum result, considering that each sector has different characteristics. Considering the importance of information related to companies can influence investors in making decisions, but the previous studies showed different results. So, we conducted a study of investor response towards stock split in the consumer goods sector in Indonesia. Hypothesis 1. Stock split has a positive effect on investor response. And this is our research method to test our hypothesis. Calculation formula for abnormal returns adopted from actual rate of return from company on the day minus expected return from company on the day. Then the expected return is calculated from intercept of the firm multiplied by expected market return on the day plus risk-free rate of return. Then cumulative abnormal returns is the total daily abnormal returns of the company on day. Then the next presentation will be explained by my partner Catherine. Thank you.
Thank you, Alicia, for the time. Before continuing the presentation, I would like to introduce myself first. My name is Catherine, a student from Petra Christian University, Indonesia. Now, I'm going to present about the sample data of this research. This research used public company in the consumer goods sector in Indonesia from the period time of 2016 until 2020. Based on the criteria that we used, the final sample data are 56 companies. Next, we present the regression result of investor response that were calculated using cumulative abnormal return using the 11, 5, and 3 days event period. First, we found that the coefficient of dummy from all event windows shows a negative value, which means that investors responded negatively to a stock split. Previous research stated that stock split was carried out because it's easily accessible to institutional investors or small investors, but the purchase of shares didn't affect the stock's price because of the small purchase volume. Stock split was responded negatively by investors because currently investors prefer to invest in a mutual funds that has a lower risk than buying shares in higher risk. Second, the market capitalization on CAR 11 and CAR 5 had a negative value, while in the CAR 3 shows a positive value. If the market capitalization value is higher, then investor has higher profit too. Last, the size from CAR 11 and CAR 5 has a positive value, while in the CAR 3 shows a negative value. Based on the size effect theory, the larger the company size, then the market power and the operation efficiency will increase too. So, this concludes the main focus of the discussion for today. To end, I would like to highlight that there is a negative response from investors to stock split from the consumer goods sector in Indonesia. We also found that there is a significant effect from the firm size in the long-term period as well as the market capitalization in the short-term period. For the limitation of this research, there is some data that are incomplete, such as publication date of the financial statements, zero stock price, and many companies that conduct IPO in the 2017. In the CAR calculation, we score the data manually, which can cause an error. That is all of my presentation for today. I hope that this presentation can be a useful information for everyone. Thank you all for your attention.